Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to our weekly podcast. Global equities trended lower as investor positioning remained cautious amid lingering US regional banking sector stress and mixed economic data from US and China. Major global equity indices ended lower over the past week, with the MSCI World and MSCI Emerging Market indices falling 0.4% and 0.9% respectively. In the US, the S&P 500 and Dow Jones Industrial Average fell 0.3% and 1.1% respectively, while the Nasdaq Composite Index rose 0.4%. Back home, Indian equities continued their positive momentum for the third consecutive week. The Nifty index opened on a positive note but traded sideways later in the week amid mixed global cues, but still managed to post a 1.4% weekly gain supported by reported earnings which came in line with expectations and improving foreign investor inflows. Broader markets underperformed the Nifty index, with the mid-cap index up 1% and small-cap index up 0.8% for the week. Among sector, auto and banks were the best performing sector with gains of over 2.7% over the week, while capital goods and metals were the worst performers with cuts of over 1.7%. The Indian fixed income market had a stable week, with bond yields staying relatively flat across the curve as strong investor demand during the week was balanced by profit booking by domestic traders and a rally in US bond yields post the release of long-term inflation expectations, which rose to 3.2% at the highest level since 2011. The 10-year Indian government bond yield fell 2 basis points to a 13-month low of 6.99%. The 3-year and 5-year Indian government bond yields remained unchanged for the week. The INR depreciated against the USD as rising US bond yields and strong USD indicated the positive impact of lower crude oil prices and improving foreign investor inflows. For the week, the INR fell 0.5% to close at USD 82.2 per dollar. Among the other key updates for the week, the first one was on India's consumer price inflation, which eased sharply to 4.7% in April 2023, the lowest reading since October of 2021, and came in below 5.7% reading in March and the Bloomberg consensus of 4.8%. The moderation was driven by easing food inflation, which fell to 3.8%, driven by a contraction in prices for vegetables, oil and fats, and meat, partially offsetting a rise in cost of cereals, milk, and spices. Also, cost of sugar and confectionery went up 1.9%. A slowdown was also seen in the cost for fuel and light, clothing, and footwear. The second macro update was on India's industrial production growth, which eased to 1.1% year-on-year in March 2023 and came in below Bloomberg consensus expectations of a 3.3% rise and the 5.6% reading in the previous month. The slowdown was driven by a weaker manufacturing sector output, which fell to 0.5% versus 5.6% over the previous month, amid sharper contraction in consumer durables and consumer non-durables and moderation in infrastructure and construction activity. On the other hand, output rose for capital goods sector. For the fiscal year 2023 period, the industrial output grew 5.1% compared to fiscal year 2022. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.